All right, so just when we thought things were getting better for crypto, a whole bunch of bad news has been dumped back onto the market. We're seeing Tesla selling 75% of their Bitcoin, blockchain.com laying off an additional 25% of their workforce, more bankruptcy proceedings, and we're seeing that Minecraft is outright banning NFTs. So we got a lot to cover in today's video, a lot of bad news, but there are a couple of things to be excited about, things that are still holding, which are pretty good. So if you enjoy this sort of content, I'd appreciate it if you like the video, subscribe to the channel. First thing, going to be overall crypto market is still holding that $1 trillion market cap, right above $1 trillion at 1.02. This is a good sign. We had seen Bitcoin and the entire crypto market drop well below this for a couple of weeks there, but even with all of the bad news coming out over the last 24 hours, we've still been able to hold strong above $1 trillion. So that's good. The bad news is that we have seen that Elon Musk and Tesla have sold 75% of their Bitcoin for a total of $936 million. This is according to their Q2 earnings report. And there's a lot of mixed signals around this because Elon Musk has always talked about Bitcoin, how he's bullish on it long term, how they wanted to keep some on their balance sheet, and how they really didn't have any plans of selling it, but they did. So a couple of reasons why. It's not that they're just bearish on crypto. It's not that he said they're not going to ever buy back, but the main reason why he said they sold their Bitcoin was because they sold a bunch of their Bitcoin holdings was because there's a lot of uncertainty with COVID lockdowns in China, when they would be alleviated, what's going on there. He says it was important for them to maximize their cash position given the uncertainty of COVID lockdowns in China. So when you look on the surface, yes, that is a concern, but it looks like that really wasn't the main reason why Elon Musk and Tesla sold their Bitcoin. When you look at the data, you could see from Q2 earnings, you could see that Tesla actually only had $847 million for cash and cash equivalents during the quarter. And that is including the $936 million sale of their Bitcoin. So what it looks like is that if Elon Musk didn't sell that much Bitcoin, their 75% of all of their holdings, they would have been negative in terms of cash flow for the month for Q2 2022. And this is something that would not be good for investors. We would have seen the stock tank even more with everything going on in the market. So even though, yes, it's a concern with what's going on with COVID in China and lockdowns potentially worsening, that doesn't seem like it's the main reason. The main reason why it seems like Elon Musk and Tesla sold their Bitcoin was simply to artificially boost their earnings, their Q2 earnings, and make sure that cash and cash equivalents stayed in the green, stayed positive, because if they didn't sell, they would have lost money. So it doesn't seem like Elon Musk and Tesla are bearish on crypto. Obviously, it's not good for the market. It's one of the main reasons why we have seen the market drop so substantially over the last 24 hours when we had seen a pretty good rally over the last 7 days. So something to keep an eye out on, but he doesn't say that this should be any verdict on how he thinks about Bitcoin or what they believe in Bitcoin or the technology. He says this should have no representation of that. They're simply doing it for other reasons. So that's why the market's really down, but it's nothing to be too concerned about long term when you're starting to look at the reasons why they did it. I wanted to quickly interrupt today's video to bring you a word from our channel partner, YIKES. YIKES is a crypto trading platform that gives traders the ability to trade with up to 100x leverage. While it's important to remember that leveraged trading does carry its risks, you're still able to profit during a bear market. You can both short cryptocurrencies and you can also trade with smaller amounts, especially on YIKES, because they have a minimum deposit of only $10 and a minimum trade value of only $1. In addition to this, YIKES has a very simple and easy to use platform that allows you to pick between cross margin and isolated margin to help determine your risk. You can use BTC, USDT, USDC, and many other cryptocurrency trading pairs and use these as collateral on the platform. This exchange is definitely worth taking a look at in my opinion, so make sure to use my code in the description. You could get up to $1,500 when you deposit $300 or more, so definitely make sure to use my link in the description. Check out this platform today and let me know your thoughts. Anyways, let's get back to the program. Next thing I want to talk about though is going to be the 200-week moving average for Bitcoin, because while we had seen Bitcoin's price break back above this over the last few days, with this massive announcement coming out from Tesla causing a dump in the market. We have seen that Bitcoin is now just holding barely above this. This is a heat map right here, and we could see it updates every single week. But the 200-week moving average right now is at $22,673. Currently, Bitcoin's price is basically at that exact number. Currently, Bitcoin is at $22,500. It's been hovering right around that $22,500 per coin range for a little bit now. So key thing over the coming days is going to be, is Bitcoin going to be able to stay above this 200-week moving average, which it did break above for a couple days there, or with all this negative news, is it going to drop back down? Because this is like a line in the sand. This is a very important level for Bitcoin historically, and if we want to see Bitcoin continue its rally higher, because it is still up significantly over the last 7 days, really the last 2-3 weeks, if we want to see that continue, that bullish outlook, we need to see Bitcoin price stay above that 200-week moving average. Next thing that's going on, which isn't too great, is going to be with Minecraft. Minecraft officially bans NFTs, and a lot of people are not too happy about this, but Minecraft has announced that NFTs and blockchain technology will no longer be allowed on client and server applications. And they said basically that the reason why they're doing this is it's standing in conflict with the spirit of Minecraft. And basically what they're saying is that Minecraft should be about gaming and creativity and not about profiteering. And if they allow NFTs to continue, it's shifted the focus away of the game from gaming to profiteering. And they said they don't want that. That's not what the game was created for. That's not like in the spirit of Minecraft. So they've officially banned NFTs, and that's a pretty big deal because Minecraft has 141 million active players worldwide. So that's a big population that's not going to have access to NFTs that probably would have liked to integrate them, if not right now, in the future. And we were starting to see it take place. There were a number of studios and companies that were solely dedicated for Minecraft NFTs. So this is something that is another blow for crypto coming out at a time where we're seeing Elon Musk and Tesla say that they're selling a lot of their Bitcoin. So that just added on to the negative news. And other than bad news, it's just been not great 24 hours, was that blockchain.com has officially slashed another quarter, 25% of their workforce. So while on the surface, this doesn't seem great, we're seeing a number of the top companies in the crypto space continue to lay off people. Crypto.com, blockchain.com, Gemini, all these companies are laying off people. We got to remember one thing. The one thing is that, for example, blockchain.com over the last 16 months hired 450 people. So they went from having 150 people staff to 600 people. They added 450 people in the last 16 months. Now they realize, okay, we hired too many people too quickly. There's the crypto winter. Things aren't looking too great. We need to scale this back. They are reducing their workforce by 150 workers. But you got to remember, in the last 16 months, they're still net positive for how many employees they've hired, how many people are still working at the company. Because 16 months ago, they had 150 people. Even with this massive layoff of 25% of their workforce, they're still going to have 450 people. So if you look 16 months ago, 150, now they're going to have 450. It's still a 3x increase in the number of employees. And while it's not good that they have to lay off 25% of their workforce, they just had gotten overly eager, overly optimistic about the state of the market, which is why they had hired so many people so quickly. And now they have to scale it back a bit. Last thing I want to go over is going to be with what is going on with crypto lender Vauld. Vauld is a platform that I've talked about a lot on the channel. I had my funds in this platform, not all of them, but I did have a significant amount in. And according to data and recent court proceedings and filings and documents from the High Court in Singapore, I believe, crypto lender Vauld owes $363 million to retail investors and a total of $402 million to all of their creditors. So about 90% of all the money they owe is to retail investors from basically freezing withdrawals. So when you're looking at this, Vauld talks a little bit. Their CEO came out and says that they're not looking at going down the route of bankruptcies. Currently, they're in talks of being acquired by Nexo, and they said that right now, that is their plan moving forward. They're not in as bad of state as many of the other crypto lenders with billions of dollars owed to institutions. They're not in that same position. Yes, it isn't great. They owe $403 million, $360 to retail investors, the other $40 to institutions. But According to their CEO, he says that they're not necessarily looking at doing bankruptcy proceedings. They said they're committed to closing this transaction with Nexo, and customers should ultimately be able to get their funds back and withdraw them at some point in time in the future. Still not great, but it looks like if you have money on Vauld, there is a chance, a higher chance, that you're going to receive that money back than if, for example, you had your money on Voyager Digital or Celsius or some of these others that are struggling. So really, that's what's been going on in the crypto market. That's why we're seeing such a flip, such a turnaround, and why we've seen a massive sell-off in the last 24 hours. It's a lot to do with Tesla and Elon Musk, but also there's a lot of other news that came out at the exact same time that really just wasn't too great. So hope you enjoyed today's video. Let me know your thoughts on the overall state of the market, and I'll see you guys in the next episode. See ya.